Hello friends, welcome to my channel FinTech Logics. So today we will discuss about specifically digital payment setup. Now we have discussed about digital payments in lending in a lot more detail. If you have not seen my earlier videos, I'll provide the link here. Please have a look. Now we have discussed about how digital payments is making the journey a lot more smoother in terms of either it is replacing your offline mandates or offline payments, replacing your ECS, which was cumbersome. Now it also helps a lot in the place of the NACH system, which was there initially, where we had to set up mandates manually, and how this is helping in terms of recurring payments on a day-to-day loan repayments. So now, as we have seen the importance of digital payments, let's also look at what were the major issues in setting up these payments and how these were being solved by two of the major frameworks which is working in India as of now. Now, in this regard, the first step to know is that there are two frameworks which are working at this point of time for all these digital payments. So either it is e-mandates or it is e-NACH. Now, to know in simple, both these are helping, but your e-mandate is basically an infrastructure that is created by individual banks, and e-NACH is a setup that is created by NPCI, which is actually one of the primary bodies in India, innovating a lot in the payment and card space. Now if you look at the coverage of both these, so e-mandates as it is developed by major banks, we would still see that there are 30 plus banks where e-mandate infrastructure is created. So e-mandate infrastructure as in you would have the APIs, you would have the authentication system and all to convert. Now in case of e-NACH, because NPCI has integrated with a lot more banks, officially the number is 50 plus, but there are a lot more than this who are also utilizing NPCI for setting up the payments. Now primarily for the registration process, there is not much difference. If you see e-mandates as it happens through the bank's infrastructure, the merchant has to build the connection between a merchant's UI for payment and the bank's APIs directly. Whereas in case of e-NACH, merchant has to build the relationship between your merchant's UI and NPCI. They do not need to worry about different banks' infrastructure. So definitely for a merchant, it becomes little more easier because all he or she, the merchant needs to build is only one integration, and in turn it will take care of the other banks in the background. Now the authentication for your e-mandate happens through your net banking and debit card. For your e-NACH, normally it is created through Aadhaar signing. So normally it happens that digitally you create a file for e-NACH. Customer e-signs the mandate, and NPCI does the rest by taking this creation of a UMRN, sending it to the respective banks for registration. All that is being taken care by NPCI. Now coming to the registration timings, both of these are real-time registrations with very minimal differences between the registration time. Almost you can say that both of these actually reduce the timing of registration to a large extent. Now the limit, if you look at, normally if you see the limit of your e-mandates is slightly higher. It can start from your 5,000 and go up to 1 crore. For e-NACH, this is normally for per day 1 lakh payment. So normally for loan repayment purpose up to certain value, it e-NACH works smoothly, because 1 lakh would be a good amount for your repayment amounts. But if it is higher loans, then probably people go towards your e-mandates. Now, if you look at cancellation purpose, both of these can be cancelled at any point of time with the authorization of the lender and the customer, and it doesn't create any issue. So in case of e-mandates, because this is facilitated by bank, you can do it in an easier fashion by going to or accessing your net banking, instead of in place of e-NACH. It has to be worked out through an email or a relationship manager. Now, in case of e-mandates, normally the services are free, but some cases I have seen that there are minimal charges. But in case of e-NACH, because this is intended to promote more and more financial inclusion, this has been kept free at this point of time. Now, in terms of your advantages, both these systems provide a seamless registration process of recurring payments. Your efficiency definitely goes up, your cost comes down because of the automation framework of registration, and your errors come down because of the there is no manual entry in the system. Turnaround time we already saw, because the registration time is less and turnaround time gets improved. Effort, definitely, because the centralized framework of integration and your infrastructure is already built either by your bank or by NPCI. This reduces the overall effort of the merchant or the lender to integrate and start their operation immediately. So definitely effort comes down in terms of building the framework, in terms of not printing the manual forms and not missing the deadlines of the loan repayments. And this is also a very secured mode, because there is no paper printing. Your MFA or your limit or customer consent, it can be done in a seamless manner. MFA is by the way the multi-factor authentication, which is enabled in this layer. This helps in additional level of security. Now, having developed all this, now NPCI is also working on setting up an UPI auto pay system that would make the overall process of registration and collections even more smoother. So this is what I wanted to cover in this video of setting up your registering your mandates for your recurring payments purpose. Thanks a lot for watching my video, viewers.